Hi, everyone. Can you hear me? If you can put, you can put it in the chat window if you can hear me properly.
You're audible, Parul. Continue.
Okay, perfect. So, hi, everyone. Thank you so much for joining this live webinar. And I really appreciate that you taking out time on a Saturday. I know it's a day off for most of us, but thank you so much for joining. And I'll definitely try that. It's the best use of your time, and you will definitely not regret joining this live stream session. So, just a quick introduction about myself in case if you don't know me yet. My name is Parul Oberoi. I am based in Australia, and I am an Indian by origin. And if you haven't watched my channel before, I have more than 15 plus years of experience in both finance and marketing. I am in a senior leadership role from a professional standpoint, and I have been running this YouTube channel for past couple of years now, and I do talk a lot about NRI stream, but also around finance and professional and personal upliftment. So in case if you haven't watched my channel before, consider subscribing. Do take a look at some of the videos that we have done. And for today's webinar, I have my esteemed guest, Mr. Akhil Chaturvedi. He is the executive director at Motilal Oswal Asset Management Firm. You might have heard about this. In case if you are investing in some mutual funds, you may have heard about Motilal Oswal. And I have done a previous session with him on Gift City Investment. So Gift City Investment is one of a fast tracking investment instrument which is picking up pace in last few years. And I've got a lot of queries on Gift City Investments, both in terms of the recent videos that I've done, and that's why I thought that it's a good idea that I bring Mr. Akhil in, and we will conduct this webinar, make you understand what Gift City Investment is all about, how it can benefit from a taxation standpoint, which sectors are growing, and then we'll have 30 minutes for Q&A as well. So I will hand over to Mr. Akhil. Mr. Akhil, if you can just do a quick introduction about yourself for the audience, and then let's dive into what Gift City is all about. What are some of the benefits? We'll keep first 30 minutes for the presentation. In the meantime, for the viewers, if you have any questions, please pop in the chat window. And once Mr. Akhil is done with his presentation, I'll pick up those questions and we'll take next 30 minutes to answer all of your questions. Mr. Akhil, I'll hand it over to you now.
Yeah, thank you, Parul. Thank you for the invitation. Thank you so much, all of you who are viewing the channel. It's a good opportunity to talk to all of you directly. Thanks to Parul for organizing, this special seminar. So yeah, I think it's a Saturday, so we'll try to keep this interesting for you, and your time is well spent. So my name is Akhil Chaturvedi. I'm the executive director at Motilal Oswal Asset Management. I've been in the business of investment for now over 25 years. Worked with companies like Birla Sun Life in past. I'm with Motilal Oswal now for over 12 years, and I oversee the entire business, which includes sales, products, operations, technology, all of those things. So that's a brief intro about myself. So today what we are trying to do is talk to you about India as an asset class, why it makes sense to invest in Indian markets. What is Gift City? For those of you who want to invest in dollars, we have a great vehicle which is now available through Gift, and we have two products we have launched on the Gift City vehicle. And so I'll explain you a little bit about Gift, and then I'll briefly take you through the products, and if there is interest, then you can obviously connect with Parul. So first things first, a little bit about Gift City. So this is basically based out of it's in the obviously it is part of India, located in Gujarat, part of the Ahmedabad city. It's a special economic zone which the government of India has created to basically attract global financial services to participate into India, and for Indians to actually participate into offshore markets, right? So it's a special economic zone where several banks are now based out of Gift City. Several mutual fund houses, asset management companies are based out of Gift City. We have private equity, real estate. So the entire gamut of financial services is now based out of Gift City, where they can offer their products and services in USD, right? So it's a offshore location based out of India, where one can bring in dollars and take out dollars, right? So as simple as that, I could make it now. Up until now, before gift, some of the popular jurisdiction used to be Mauritius. A lot of FPIs used to invest into India through the Mauritius route. Some of the other popular vehicles were basically based out of Europe, the UCITS vehicle, or through Singapore, or through Hong Kong, right? So these were some of the vehicles where people like you, based out of India, wanting to invest in India, used to use those jurisdictions to come into India. Now you can directly come into India through the Gift City, right? Some of the advantages of Gift City, one, of course, I think the cost structure of Gift City is very, very efficient. It is far more cheaper than operating out of Mauritius. So it saves at least 30 to 40% of the operating cost, and eventually that adds up into the investors' returns. So cost structure is very, very efficient. The vehicle is offering products through a specific license, which is AIF. We covered this in the previous video we did with Parul. If you guys can, go through those videos, they have explained in detail what AIFs are all about. Through AIFs, it's a SEBI regulated structure, also available in GIFT, regulated by IFSCA. There are three categories of AIF: Cat 1, 2, 3. Category 1 is for all those managers who want to offer venture capital funds. Category 2 is for private equity, real estate, and debt. And category 3 is for long only equities, as well as derivative structures like long short, etc. So these are the three categories. It works like a mutual fund. It's a pool vehicle. Investors get to participate into a variety of asset classes by participating through the AIF structure, and you become unit holders of the specific fund which you are investing in. So that's the vehicle one invest in. Coming down to taxation, which all everybody talks about. So taxation is two ways. I'll stick more on the category 3 for equity products. Now there are two kind of structures one can follow. Let's say we can have a fund which is directly operating out of Gift City, where the fund is getting managed in Gift City, right? That kind of a fund structure, the taxation is basically at the fund level. So the AIF has to pay the necessary capital gain taxes. It could be long term in nature, it could be short term in nature. Long term capital gains is about 12.5% plus surcharge. Short term capital gains is 20% plus surcharge. So any stocks which are getting bought and sold less than 12 months will attract short-term capital gain to be paid by the fund. Obviously, it is adjusted into the NAV, and any stock which is sold post 1 year will attract long-term capital gain adjusted into the NAV. Now, the another structure which fortunately GIFT has allowed to do, and that is where the tax efficiency kicks in, is basically a feeder structure, what we call as in simple language, fund of fund. So you can create a fund in Gift City, and if that fund is investing into underlying mutual funds based out of India, right? So it's a fund of fund. Then, therefore, in case of any redemptions, so there is no capital gains. The entire returns, so the gross NAV or the gross return is actually passed on to the investor. It's a pass-through vehicle. So basically you will have to pay, or one has to pay taxes in their home country, right? So there is no headache of understanding Indian tax structure, what capital gains has been paid in India, and then try to take a offset in your home country. So it just creates that much more administrative work both for us as well as all the investors. So there is no tax applicability in a feeder structure or a fund of fund structure. So if somebody is in, let's say, Middle East, and Middle East capital gains is zero, so there is no tax actually for you, right? So it works really very very well for at least those who are based out of the Gulf countries. But if you are in Australia, then there is a the tax which is applicable in Australia. One has to pay that. If you are in any other country, you have to pay the local taxes, but nothing is deducted at the India level. There's no TDS, no nothing like that, right? Another good feature about gift, which I've generally I get feedback from NRIs, is the paperwork. Now, just like any offshore jurisdiction, in gift being a offshore jurisdiction, you are not required to submit your PAN card and Aadhaar. So I find a lot of resistance amongst NRIs to give PAN cards and Aadhaar card for the KYC. You don't need to do that, so you can get that fear at least out of your mind. So okay, so that makes it operationally it is a lot more efficient, right? It's getting very very popular, gift as a vehicle. It's now, I think, across all businesses, there is roughly about $50 billion which is getting managed out of Gift City. So it is really getting very, very popular. All the top multinational banks, all the top Indian banks are now offering their bank account services and other services through Gift City. You have custodians over there, you have asset management companies, you have private equity, like I explained to you, right? So this is good structure, good thing it is part of India, and for all the things I've discussed, it makes a lot of sense to participate into India using this structure, right? So now this is what I wanted to share around gift. Now, if at all there are any specific questions, when we open up for Q&A, we can take up those specific questions. Now, coming to India and the products, very quickly in the next 20 minutes, I'll just take you through a couple of slides. uh, Parul, just confirm to me once this is visible.
Yes.
Up and running?
Coming on. Yes.
Good. The slides are changing?
Yes, I can see positives being ignored.
Yeah, yeah. So very quickly, I'm sure all of you, those who are tracking India has been the best performing market over the last 5 years. Indian markets have literally doubled. If you look at Nifty 50, the top 50 index, that's doubled in the last 5 years. If you look at the mid cap and the small cap, they've actually tripled and quadrupled also over the last 5 years. Now, India has done well because post COVID, Indian economy bounced back pretty well. We became the fastest growing economy. We saw a very, very good earnings growth from the Indian businesses, and that is what reflected into the PE multiples, which started to get re-rated, and there is where the great performances one has experienced over the last 5 years. Having said so, last year, given the kind of returns one made in India, the markets were slightly expensive. So valuations were looking slightly stretched, but also along with that, the uncertainties around the US, Trump coming in, and all the kind of tariffs and tariff war, what everything is getting discussed, that was also creating a little bit of nervousness. The other thing which was a bit of a concern in the markets was the high treasury yields in the US market and the strong dollar, right? So all of these became reasons for the Indian markets to correct. We've seen very healthy correction, and it was a much needed correction, because for investors, it always makes sense when you're allocating capital into stocks. You have to be comfortable in terms of the valuations, because if you end up buying at stretched or higher valuations, there is that much time one needs to spend in the market to actually see the positive return. So when you come into markets where the correction has undergone, the PE multiples have compressed, it makes a lot of sense to invest. So from those of you who are viewing this and you're looking at deploying capital, I think these are good times to deploy capital. We have seen good 10 to 15% correction across at the headline level across different indices, but a lot of good companies actually have corrected 30, 40, 50%. So I talk to my managers, and up until December, they were really finding it very difficult to pick and choose good companies at good price. But now good companies are available at good price. So I think even the managers are excited in terms of buying good companies. Now, what are some of the positives what we are seeing, and therefore we have seen some recovery. I think the last Zoom call what we did with Parul, we were still in the correction mode, but in the last week or so, post the call, the markets have actually climbed up almost 1,000 points on Nifty. So we've seen a decent rally in the market. Uh, I think it will hold up. Volatility may be there for another quarter or so, but subsequently, the second part of the year looks very promising. And some of the reasons is that one, from macro positioning, the oil prices coming down helps India quite a bit. From inflation perspective, the dollar index also has corrected from about 109 levels to 103, 104 levels. The US Treasury yields also have corrected from 4.8 to 4.25%. Actually, it has gone slightly lower than that as well. US markets also have been correcting. Therefore, we could see hopefully that India will outperform US going forward. Valuations are looking much more easy. RBI has injected reasonable liquidity, so banks are sitting on good cash. We are seeing some good credit growth as well. Our inflation also has come down. And in terms of the economic growth, the GST revenues give a good signal how the economy is doing, which itself has grown from 8.3% to 12.6%. And what we read in the print is that there are very healthy discussions going on between US and India around the tariff, and I think there should be a good kind of arrangement between the two countries, which should not impact both sides in a very adverse way. There will be tariffs. I think there would be some adjustments, but it should not be as bad as what one would have really thought about. So I think these are some of the reasons why I feel that the markets have largely corrected. We are close to bottom, or we are behind the bottom, and from here I feel that the markets could give reasonably good returns going forward. Therefore, it makes a lot of sense to take decision and start your allocation. You may also stagger your allocation over the next 1 quarter, 2 quarters. Just in case there is any volatility, always makes sense to stagger out your investments when it comes to equities, right? So this is just giving you a little context on why it makes sense to put money into Indian equities right now. I spoke about valuation. This is how the valuations for different indices. For Nifty 50, the peak valuation in December was 23 times. It's come down to 18.6 times. So we've seen a 15% correction on the Nifty 50, seen a 18% correction on valuation in the Nifty 500, which is a very broader index, 500 companies. For the mid cap also, we have seen a 20% correction on the valuations, and the small cap was also corrected by 28%, right? So uh, buying low and selling high, I think that's principle everybody follows when it comes to equity investing. So I think this correction is much appreciated and more welcome. A lot of the global rating agencies and the top research houses are now making very bold call for India. Citibank is talking about 26,000 for Nifty by the calendar year end. Morgan Stanley is also giving a very bullish view of India. Bank of America again, sees a 14% upside, and so on and so forth, right? So everybody is now really talking about that this year eventually could be a year where the returns will be positive. And let's see if we can make new highs, or at least get back to the levels what we have seen in September 24. Comparing to the world, also, if you see valuations after the correction, the premiums which had gone up to almost 49% compared to the MSCI. If you compare MSCI India versus MSCI, the world index, the premiums somewhere in 22 was like almost 49%, 32% in July to October 24. It has come down to about 7%. So the if you compare both these markets, if the premiums are coming down, also gives you an indication that the valuations are now bottoming out, or the correction is bottoming out. So I just wanted to give you a flavor around why we feel the valuations are looking compelling. Some of the other very strong macros for India are forex reserves, which had hit a high of $700 billion. Last year, because of all the FII outflows, we went down to about $618 billion. We have started to inch back closer to $640 billion. Strong dollar reserves obviously makes our current currency very, very stable, and strong dollar reserves also ensures or gives comfort to FDI, FIs to come into any country. It basically makes your currency stable. We have seen a peak. Of course, all global currencies depreciated against dollars. India also depreciated by about 4.5% from 83 levels to 87.5. This is also, so Indian currency has appreciated. We are at 85 rupee level right now. Let's see how it goes. It's very difficult to really predict, exchange or it is currency. But I feel that if you're a long-term investor in India, do expect 150 basis point to 200 basis point depreciation over long term, which itself is actually one third of what we have seen in the past. So usually Indian currencies to depreciate at about 5% per annum. We expect with all the strong macros, the rate of depreciation to actually come down to 1 to 2% kind of level. We spoke about crude oil coming down. It really helps India quite a bit in terms of reserves and stabilizing the currency, and the 10-year yield itself on US coming down is a big positive, right? Eventually, stocks are all about earnings. Eventually you make as much money as the companies make. We expect next 2 years the top 50 companies of India to give a profit growth of about 11%, mid cap companies to give a earnings growth of 20%, and the small caps to give a return of 18%. Therefore, your portfolio can be a good mix of large, mid, and small blended basis. I think Indian companies can actually deliver a earnings growth anywhere between 12 and 15% over the next 2 to 2.5 years. This comes from Bloomberg. So Bloomberg consensus numbers, which is basically consensus amongst all the top research houses, rating agencies, right? So as fund managers, we take a lot of interest in the earnings growth, because if the companies don't grow their profits, obviously the valuations will not go up. So this gives a lot of comfort in terms of what you should expect from Indian businesses over the next 2 year period. So this was all about the macros of India. Now a little bit about Motilal Oswal AMC, how we manage money. So we use the investment frameworks of QGLP. So basically, we are high quality, high growth investors investing into high quality businesses which can deliver very strong earnings growth momentum over long term period, and try to buy that at a reasonable price. So in terms of our philosophy, we are high quality, high growth investors. We don't practice value style of investing. We practice growth style of investing. So as long as growth is coming at a reasonable price, those are the kind of businesses you will find in our portfolios. How do we search for growth? Is basically identifying high growth themes, which are the sectors where we find growth is going to be significantly higher than the benchmark earnings growth. So at this stage, if you see our portfolios, you will find a lot of exposure towards the China Plus One and Make in India theme. Roughly, our exposure towards these two themes would be anywhere between 30 and 50%. On the financialization side, we are underweight on the banks, but we are overweight on NBFCs and capital market businesses. On the technology side, we are excited about the mid-cap IT companies, some digital businesses, but really underweight over the large-cap IT companies. On the consumer side, underweight on FMCG, overweight on the urban brands. In the healthcare, we are looking at hospitals, and on the telecom side, again, that's another story which is looking. So these are some of the themes where we feel that the growth will be high, and accordingly we have positioned the portfolio. When I show you the portfolio, you will find exactly how we have created under each of these themes, how we have bought the stocks, right? So that's the philosophy and how we select growth. This is the first fund we launched. This is launched somewhere in May of 2024. This is a fund which is basically directly getting managed in the GIFT City. So this fund does attract capital gains, what I spoke about. We are managing about $115 million in this fund. So it has been the fastest growing fund actually amongst any other fund which is present into GIFT City. We are seeing a very healthy inflow from NRIs into this fund, right? So like I said, this fund is basically believes in a underlying strategy, which is what we call as a founder's strategy. What you mean by founders is basically companies which are managed by Indian promoters or Indian entrepreneurs. So this portfolio actually will not have public sector businesses, or it will not have multinational companies. It will have all companies which are promoter led businesses. Now, why we chose to select this theme in India? We have a similar portfolio which is also available in INR terms. It has a track record of 2 years. It's the fastest growing fund in India as well. And in India, we are managing about $1.5 billion cumulative through the PMS and the AIF vehicle. Now, if you see this for the last 25 years, if you track the fastest growing companies, the wealth creators, consistently growing companies, if you see the top 10 companies like Kotak, Pidilite, Asian, Shree Cement, Berger, all the top names have been promoter owned businesses, right? And why promoter owned businesses create a lot of wealth is because these companies have higher revenue compared to MNCs as well as PSUs. They have higher operating profit margins as well as the profit after tax. If you see the blue columns, is basically what we looking at the founder-owned businesses. The yellow bars are the MNCs, and the orange bar is the PSU-owned businesses. So, like I said, the more profits and the more growth. So, therefore, the promoter-owned businesses make more profits, more sustainable profits, and therefore we have seen these companies which have given CAGR returns over 25 years, anywhere between 20 and 30%. Now, this is just for illustration purposes. The portfolio will track or try and not look at companies which have done well in the past. We have to see which companies will do well in the future, right? So this is just for illustration purposes. So how we create our portfolio, we take the top 500 names. We put minimum 26% promoter holding. We come down to 300 names. Companies making minimum 100 crores profit. You come down to 250 names. ROEs, high quality, minimum 50% ROEs. You come down to 150 names. Strong earnings growth, come down to 20 to 30 names. So from a 500 stock universe, this is the funnel which we use to create a portfolio of 20 to 30 high growth companies, right? This is how the portfolio looks like I said, these are the themes. So you have power, you have realty, you have financial services, auto services, manufacturing, like I said, is a very large theme. This is the China plus one make in India story, and consumer discretionary. It is a good combo of large, mid and small. So about 90% large cap, 42% mid cap, 40% small cap. Mid and small gives companies are the companies where you get very strong growth, and large caps give you stability in the portfolio. In terms of performance, like I said, this is in India. This fund is about 2 years old. In dollar terms, the compounding has been about 30% for this particular portfolio. For the benchmark has been 19%. So it's a very strong 11% outperformance over the benchmark. If you see this chart out here, on a 1 year basis, there is an outperformance of 5.3%, and here, of course, 1 month, 3 month, the markets have corrected, so that's a negative return. But long-term returns are looking very, very attractive for this particular portfolio. So that is the strategy number one, already live. Like I said, over $100 million in size, very strong theme. Worth evaluating for your investments. The second fund is the fund of fund, which gives you the tax efficiency, like I spoke about. It's a pass-through vehicle. So this fund is basically called uh, Gift City India Equity Fund of Fund Trust. And this fund is basically investing into Motilal Oswal large and mid cap mutual fund, which is based out of India. So all the money which comes into the Gift City is straight away put into the large and mid cap mutual fund managed by the Motilal Oswal Asset Management Company, right? Why we chose large and mid cap? Because one, over long term, we have seen that a combination of large and mid cap companies tend to deliver higher returns over the Nifty 50 or the top 50 companies. So there's a very long track record of almost 10 years or so. And then again, if you see calendar by calendar and compare it by any index, the most stable and consistent return is basically out of the combination of large and mid cap 250 index, right? So we feel that this is it's a good strategy which gives you at any given point of time about 30% exposure to large caps, 35% exposure to mid caps, and the rest is flexible. It is on the fund manager. It could be large cap, it could be mid cap, it could be small cap. So it's a well diversified fund. It will give you exposure towards large, mid, and small. But at any point of time, by definition, the fund will not go below 33% in large and below 33% in mid cap, right? So you will have a good exposure, a diversified portfolio across market cap buckets, across sectors, across stocks. Right. It's a 6-year-old portfolio. The Indian Mutual Fund, large and mid-cap mutual fund, we launched it in 2019. We manage about 9,000 crores. That's slightly over $1 billion in size. One of our very consistent funds. And if you see in dollar terms, this fund has given a 1 year return of 20%, 3 years return of 17% per annum. 19% on a 5-year basis, and on a 6-year basis almost 20%, and a very healthy alpha year on year. So the returns are out here. In terms of the risk ratios also, the fund is nicely, so you're getting good returns at much lower risk. So that makes that's why we chose this fund for this particular strategy. Now the portfolio looks like, again, the high growth themes out here. You'll find a lot of similarity between this fund and the founders fund. And yeah, so that's the portfolio. That's the fund for you. That's the returns for you. This is the portfolio. And like I said, NRIs can invest. This fund, 100% NRIs can invest. There is no restriction in terms of 49% limit, etc. There is no tax liability for the investor, no TDS, no long term, no short term. You have to pay your taxes in your country, whatever taxes may apply. The fund itself is one of our best performing funds, and yeah, so broadly these are some of the features of this particular portfolio. So with that, I think I'm on time. I'll stop share my presentation, and we could probably look at individual questions. Thank you very much for your precious time. Yes, Parul, over to you.
Oh, well, I'm just trying to sync up with YouTube. I'm not too sure if there is a bit of a lag on YouTube and Zoom, but I am assuming it's not the case. I'll just maybe check with the audience on YouTube that if they are. Just give me a second. Because I think on YouTube there is a bit of a lag, but I feel that I'll just check if they can hear me.
Hey, you are audible. Don't worry about that.
Okay. Okay, I have few questions on. So I think there is somebody named Vimal Shukla. He says that he's also working in Motilal Oswal. So I think that's good that you have a common connection over there.
That's good.
I
Where is he working? You can just type and let me know.
Yeah, I asked him in which team, so I think he hasn't responded yet. But Vimal Shukla is his name, so I'm assuming he's in some part of your team. Actually, there were a few other registered participants also in Motilal because I could see in their email address that that there was a bit of yeah, there were a few participants, I think, from Motilal. But Vijendra has asked that we would like to seek your guidance regarding the recent amendment to the finance bill. Does it resolve the retail scheme tax issue?
What is the, I don't know, what is the finance bill? What is it about? I didn't understand the question.
So I don't know. I mean, he's asking that we would like to seek your guidance regarding the recent amendment to the finance bill. Does it resolve the retail scheme tax issue? I'm not too sure if this is
Or
linked
maybe
to
you
give.
can, if somebody who's asked
I'll
the
ask,
question, can you elaborate a little bit?
yeah, I'll ask him to elaborate. And he's saying, additionally, does this fully override the previous CBDT circular on 27th of Jan 2025, or are there interim measures to be followed?
I'm not understanding this question.
No worries.
Maybe you can just email to
Yeah, I'll just,
myself or
I'll just,
Parul. We'll look into it.
yeah, Ajay, I'll just maybe respond to him if he can. Just give me a minute. I'll just respond to him. Can you please elaborate? Just 1 minute. And then there is a comment that, okay, he's saying that it's about some restrictions as placed by four conditions. Not.
We'll take it up later. You can just write an
So
email to
Tejinder,
me.
maybe I have your details. I can take up with you a little bit later. So he's saying one of the conditions was retailer scheme can't invest beyond 15% in unlisted securities. Not too sure if this is something relevant to this. Anyways, Tejinder, maybe I'll speak to you offline and then I can take up your questions and I can definitely address that later. Then I think you made a comment that Gift City ranking has moved up from 52nd to 46th position in the GFCI 37. Gift City remains the only Indian financial center to be featured in the global top 50, only one from India.
Yeah. Thank you.
I think that's
All the
that's a
more
good
reason to
start.
come to gift.
Sure. I have one more question. How much an NRI can invest in Gift City? What is the maximum limit?
No limit. Give me $1 billion.
But I think just to add to this, I feel if Rajiv, I think you're asking this question. So in the previous webinar also, which we conducted, the minimum, I think we have a cap on the minimum.
Minimum is 150,000. There is no upper limit.
Correct. I think the minimum is 150,000 US dollar, but there is no upper cap limit as such. And I
Yeah.
think, Mr. Rakil, if you can also, I think this question on the taxation also. I think you mentioned that in Gulf countries, of course, they are benefited the most because they
Yeah.
don't have a tax in their local country. Plus, they are also foregoing the
Taxes.
taxation in India. But in any other country outside of that, let's say US, Australia, Canada, Singapore, whoever, uh, the Indian taxation they can bypass, right? But they still have to pay the
Yeah.
local taxes in
Yeah,
the
so
country of.
it's like, let's say you are in US. I think US capital gains is 40%. I think so. Now, if you invest in the fund, the last fund I spoke about, let's say $100 investment becomes $120. $20 is your profit. Now, on that $20, there is no tax deducted at India, at the India level, right? So the entire $20 profit is yours. That $20 will attract a capital gain of 40% in US, which you have to settle it in US. Okay, so it just basically cuts your administrative thing to understand what taxes have been deducted in India and then take a set off in US, which one has to do in my first fund I spoke about, the Founders Fund, because there we issue a K1, let's say for US, which will give breakup of long-term gain, short-term gain, and then you take a rebate when you're filing your taxes in India. So let me tell you that it doesn't mean this is a tax-free vehicle. It's a tax efficient vehicle. So, right? You don't, in a fund of fund, you don't pay taxes in India, you pay taxes in your home country. In a fund, direct fund which is managed out of gift, there are taxes paid in India, and those countries where double taxation treaty is signed up, you can take a set off. So let's say whatever tax, $100 tax you have to pay, and you have already paid $30 in India, so you have to pay differential tax on the $70.
Right. And I think you also made a very good point, which is around the simplicity of the process. And
Yeah, it's
that
It's very simple, like it's just like buying any other mutual fund, right? You have to just give your basic KYC documents, your residency proof, your photo, your ID, identity card. Once the KYC is approved by the fund, you submit your application form. Once the application form is through, you will get a green signal to wire the money. Once the money is wired, we cite the funds, we allot the units.
correct. And I think that there is another question on similar redemption. So Rajiv has asked, and how the redemption will have, is there any exit load? I think in traditionally when you are redeeming the stocks or mutual fund, there is usually an exit
We have
load.
exit load. We have exit load of up to 3%, up to 3 years. First year is 3%, second year is 2%, 1%. It's basically just to desist investors from moving out too early. It makes sense to be a little bit long term in the fund. It's good that the corpus in the fund is also more stable, and generally the fund doesn't suffer on the account of other investors redeeming out.
So you said for first, what was the percentage you said?
First year is, let me just have a look. So first year is so 6 month up to 6 months. If you withdraw before 6 months, it's 4%. Before 12 months, 3%. 12 months to 24 months, 2%. 24 to 36 months. So after 3 years, it is load free.
Okay. And I think that makes sense also because typically in mutual funds, I mean, the longer you are invested, the better it is. I mean, if somebody is coming for a very short horizon, in my experience, it generally doesn't. I mean, you can. It's not. I mean, it's your money only. But from a benefit standpoint, it's always much more beneficial if the longer people are invested, the
Right.
better
Right.
usually it is. Yeah. I'll take on the next question. Can investor from US and Canada invest in any AIF of Gift City?
Sorry.
Can investor from US and Canada invest in any
Yes. Yes.
AIF of?
Yes. Yes. Yes.
Okay, so
All
there are no.
countries, everybody can participate except for those countries which are part of the FATF list. Those countries we are not taking money. Rest everything we are taking everywhere.
What is FATF list?
FATF is this financial transaction fraud. All the countries which come under that, countries like Pakistan and all those, so wherever there is this fraudulent terrorism related funds which move around, uh,
Right.
those countries are banned basically.
Okay. And he's saying that I'm not just asking for Motilal Oswal AIF, but in general, all AIF, it could be
Yeah,
of any AIF.
more generally, all AIFs can take money. I mean, in gift, you can take money from any country except for those which are part of the FATF list.
Okay, so next question is that if I put 150K and later on after 1 year, can I withdraw 50K? Remaining investment at that date is 100K, assume no growth. What if remaining investment is 160K, assume 150 grown to 210K?
At any point of, I understood the question. So basically, you have to maintain $150,000 at any point of time. Any appreciation over 150,000 can be allowed. You cannot go below 150,000. Now, if you have to withdraw more than less than 150,000, I mean, if your portfolio is going down below 150,000, then you will have to then withdraw the entire amount. Partial redemption will not be allowed if the portfolio is at 150,000. So at any point of time, anything which is over and above $150,000 is okay to withdraw, not below 150,000. Then one will have to go for full redemption if there is a liquidity need.
Okay. Tejendra, I'm hoping that answers your question because that was your question. So there's another question. Can a US resident invest or is it only just NRI?
Anybody. This is a global fund. It's not an India fund. It's a global fund. So US nationals can invest, FIIs can invest, NRIs can invest, anybody can invest.
Right.
Anybody who's outside of India, in any structure, any identity, they can invest.
And I think, Mr. Akhil, I remember in the previous podcast also we spoke about that even for people who are in India, right? Gift City does have some benefits, I believe, right? And you were talking about your own personal experience also because you were trying to save up for your daughter's education because some of the viewers, might be watching this from India as well, and not just in the live stream, but in general also. So maybe if you can touch upon a little that how it can be relevant not just for people who are NRIs or foreign nationals or people who are living outside of India, but maybe let's assume people who are in India also.
Yeah, sure. So, like I said, that Gift City is positioned basically to get global money into India. It is also a nice vehicle for Indians to participate into the global story. So, for example, somebody like me who wants to invest in US or invest in China or any other country, any other product or real estate or whatever it may be. In India, there is something called the LRS limits, which is the liberalized remittance scheme, which where the government is allowing Indians to remit up to $250,000 per PAN per year, right? So any individual can invest up to 250,000 or can take up to $250,000 outside of India for whatever purposes, right? So Indians can use this limit to invest into any global fund which is based in GIFT City and invest into global markets, right? So like I have a friend I mean, let me give you an example. Like Birla Mutual Fund has launched a product which invests into emerging markets, which is based out of GIFT City, right? So now many Indians have invested in that product using the LRS scheme, right? So Indians can also invest outside. Indians cannot invest in India through the GIFT City. That's the only thing. That round tipping cannot be allowed.
Right. Perfect. I think um, I can't see any further questions, but I feel that once this is just a live stream, but once it actually goes live on YouTube, people may have more questions. And if there are further questions, Mr. Akhil, then I'll redirect them to you and you can answer. But for anyone who is interested in these products, please feel free to reach out to me. You can book a 15-minute free discovery session. I can help understand your requirements and then assign an appropriate product. But definitely, we'll continue to have these sessions. And if you haven't watched the previous sessions on Gift City, I would be linking that in the description box. Please have a look. It will give you a lot more information about it. And Mr. Rakit, I'd like to say you thank you. I know it's a Saturday morning, afternoon in India, so I don't want to hold you up for too long. But thank you so much for taking these live stream and taking everyone's questions.
Yep. Thank you, Parul, for the opportunity. Lovely talking to you and your entire audience out here. And look forward to good participation from all the viewers. Thank you so much.
Thank you. Thanks, everyone. Bye bye.
Okay. Bye bye.